Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look again on the gold market. So as you can see, our suggestion about the maybe deeper retracement on the intraday charts has been confirmed by the market. Actually, we have two corresponding patterns as in the gold and the interest rates, mostly of the same kind. It's hand and shoulders pattern, and actually both are coming currently to a nearer standing target. So for instance, on the interest rates, you could see the pattern that we discussed in the weekend. This actually was the reason why we said that gold also could drop a bit more on the intraday charts. And here's market is coming to its destination points. Approximately it will be around 170. So potentially also, of course, it could go higher with the XOP target is moving higher, but at least currently we could consider some price action around on the gold market that corresponds to the 170 area on the interest rates. So on the gold market, we talked a lot about why we have feel not very comfortable with taking the long position in the perspective of the few weeks, just because of the overall price action and because of the nearer standing targets. So that's the reason why we are, well, a bit worried to take the long position immediately, because market still could drop here. But at the same time, if you trade on the intraday charts or you would like to go long on the gold market, theoretically it is possible to consider taking the long position, but you have to foresee and involve the possible 1650 target in your trading plan. So your stop should be somewhere below this area. And we said that you probably could consider taking the position as close to the lower bottom of the rectangle as possible. Maybe at some support areas. Also here on the daily chart, for example, you could monitoring the possible bullish grabber that could be formed today, maybe tomorrow. Once it will be formed, that at least will be something that give you more context, more confidence for taking the long position here on the gold. On the lower time frames, in the follow time frame chart, the target of the Gartner steeple 2 mostly is completed, as market has completed 30% support. So, and that is the first significant support on this upper direction. So 1727 is the first fifth support. Next area will be 1708. It's right here. On the hourly chart, maybe it makes sense to consider highest and lower standing targets. It's around 1720. It's just because this is OP actually of our hand and shoulders here. It's corresponding to the interest rates. Grabber that we discussed on weekend, on Sunday, worked perfectly. So you can see as market starts dripping and taking out of these lows. So as grabber has been confirmed. And now this is the first area maybe that could be considered for taking the long position if you intend to buy the gold. It's around 1718 support. This is 50% support and OP. Next area will be somewhere around 1702. This is XOP target on the hand and shoulders, and 1708 last fifth support on this upper direction. So that's the levels that you could keep an eye on. Currently, while retracement on interest rates still stands, and potentially interest rates also could drop more, so some retracement could be more extended once the bounce up here will be finished based on this pattern. And this, if interest rates will turn down again, well, that could support gold. But in general, as I said, taking any long position looks a bit tricky by the reasons that we just discussed. And finally, the overall clarity on the gold market happens when the market hits 1650 target. So once this will happen, based on the following reaction, we will understand whether we will get stronger upward pullback that theoretically is supposed by fundamental background, or in the case of the breakout, market will turn trend on the bearish and will just continue dropping, because 1685, this is strong monthly confluence support. And downside breakout with this support, with the minimal reaction, this will be bearish sign. And because this support definitely is worthy of strong reaction, deserve more reaction than market shows right now. So as you understand, in general, some points in favor of the bulls exist on the market, but the technical process of the position taken, it's a bit sophisticated in the current environment. So that's why at least try to, if you would like to go long and go try to take position at some strong fib levels, getting the grabber, it will be additional points, additional advantage, and as close to the bottom as possible. And also, as I said, keep an eye on the 1650, because, well, until market stands above it, the bullish context will not be broken totally. So market keeps chance on the possible strong upward reaction.